Hi, it's Dwyer. Always 1776.com, a free site. Wealthspinning.blogspot.com, a free site. And gamblersadvisory.com, a free site. For premium content where we discuss crypto, Dwyer70905.substack.com. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, let me just say before I get into Amazon, which is the purpose of this video, let me just say that right now, if you pull up the DXY chart, right, the US dollar index chart, which measures the strength of the dollar versus other world currencies, you will notice that the dollar is at its strongest level in the last 20 years. Right? It's up 7% since the beginning of this year. I need for crypto holders, more specifically Bitcoin holders, of which I'm one, and holders of gold and silver, of which I'm one, to be patient here. Right? I believe ultimately both groups will win out. But right now, the dollar, before all the 50 basis point hikes take effect, right? I believe we're going to get a series of 50 basis point hikes. I believe the dollar right now is draining a lot of money away from Bitcoin and from gold and silver, right? Over time, that will shift. Over time, people will start questioning the dollar, right? Because the dollar bears a relationship to the goods and services created in the United States, and right now the GDP is down 1.4%. Let's shift gears. As I make this video, Amazon is down more than 13%. Full disclosure, I own some Amazon. Right, there are a lot of articles right now online that are killing the stock. Right, just killing it. It's down in dollar terms, $385.93 a share. In the comment section of the YouTube video that I'm posting, and for those of you listening to the podcast, the YouTube video can be found on my Dwyer70905 YouTube account. I'm actually going to put a link to Amazon's earnings report. If you ever have a family member who has insomnia, just give them some of these earnings reports. What I want people to understand is that Amazon is one of the crown jewel companies for investors. Full disclosure, I own some Amazon, right? Amazon is a crown jewel company. As people digest the latest earnings report, what I want them to do is to look up we'll call it A, because I see my device here in the background is triggered to the A word. But AWS, their web services division, has been on fire. What I want people to do in these inflationary for now times is to understand that the cloud units of Amazon, Microsoft, right? They call their cloud unit Microsoft Azure, and Alphabet, which calls its cloud unit Google Cloud Platform. Right, folks, they're on fire. As you look at this Amazon's earnings report, please don't overlook the fact that in these uncertain times, AWS, its web services division, is up more than 36%. You heard right, 36% year over year. AWS, folks, is number one in the space. If you believe in cloud computing, Amazon is a company that you need to be interested in owning. Right? Don't be fooled by the Rivian write-off here. Don't be fooled by some softness in the retail division here. If you want to protect the value of your fiat currency, I believe AWS is one of the places to look. Let's talk about the size of the market. Now, assuming that every one unit equals $1 million, right? We have to make these numbers digestible. Just understand, year over year, the operating income of AWS has increased from 4,163 to 6,518. We haven't talked enough, just as an investment community, about the explosive growth of cloud computing, of the moat these companies have. If you're employing a third party to provide your organization with web services, you understand that this is an existentialist decision. The future of your company depends on the reliability. If it's an online company, if it's a digital company, of the third party who's providing you with cloud services. So not surprisingly, three of the biggest brands in tech, which is getting a beating, by the way, in terms of PR, Amazon, Microsoft, and Alphabet. Right? Not surprisingly, those are the top three in the space. Folks, they have a huge moat. Because of the importance of cloud computing to digital companies, it's very hard to break into the space. How are you, as a new entrepreneur, going to overcome the reputation built by the A company, by Microsoft, and by Alphabet over the years? Right? So, for me, simply put, this is a buying opportunity for Amazon. Right? Just understand, we're in an environment where the GDP is down 1.4% in the first quarter. And you mean to tell me that one of the great companies in the United States has a unit that has been on fire for quite some time, and that is up more than 36% year over year in an industry that's very hard to break into? Let me also point out, too, that here in the United States, we're having supply chain issues. You know that. Companies are having logistical problems, getting supplies, right? Being able to put them on shelves. You may have gone to your local supermarket and noticed some empty shelves, right? You may have heard of trucking delays, of shipping delays, of problems getting parts, right? I know we're having a semiconductor shortage, for example, which is impacting goods and services that rely on semiconductors. Right now, you understand that in the world of logistics, of supply chain management, you're going to have a very hard time beating Amazon, right? That's simply the reality. So, of course, in this earnings report, in addition to great numbers for AWS, its web services division, which is on page 12 of this earnings report, which will be available in the link to this video. I'll also try to put it in my podcast on Spotify as a link, right? As well as in the description for Google Google Podcasts, right? You can find episodes of my podcast on DwyerBoxingNews.com. But what I want people to do here, right? And it's page 12 for AWS. The numbers are staggering. If you're worried about maintaining the value of your fiat dollar, then of course you want to consider investing in vibrant, well-run companies with divisions, major divisions, that are growing by more than 36% year over year. But getting back to logistics, on page 1 of this report, they point out that Amazon is now going to allow third-party websites to give consumers the option to buy those goods using a program called Buy with Prime. Right now, this is going to create competition for Spotify, for example. Now an entrepreneur, rather than get lost in the matrix of Amazon.com, now an entrepreneur will be able to operate their own website, but will be able to take advantage of Amazon's logistical brilliance. Right, folks? My point to you is that as Amazon matures, we're finding out that it's extremely hard to compete with their logistical advantages, their distribution network, their ability to deliver an entrepreneur's goods and services to the end consumer. Right? You get that folded into the premier web services company. So, I'm not going to look a gift horse in the mouth here. Right? I'm going to wait for Amazon to finish plunging. As I've said earlier, it's down more than 13% this morning. I'm going to wait for it to finish plunging. Then I'm going to wade back into the water. I'm going to buy more. Let me also say this too. I know there's some people who are afraid of a stock price that's around $2,500 a share. Right? Many people are saying, hey, that is too rich for me. I don't want to spend that much on one share of stock. I need for those people to wake up. It's 2022. Right? You have several platforms, Robinhood, for example, which has been taking a beating in terms of PR, but is an excellent platform to trade on. Right? Cash App, for example, that allow you to buy fractional shares. In other words, what you're presented with isn't an issue of, gee, should I spend $2,500 to buy a share of Amazon? No, the question is, gee, is Amazon worth an investment?
Here's a station you might like, Divine Sound Radio
on
Amazon Music.
One moment. Obviously, I'm a customer here of Amazon Music. Well, let me just say, if you believe Amazon is going to grow, then you can invest any fractional amount that you want. right? $20, $50, $100, right? The point is, you should not in 2022 be intimidated by the share price, which is arbitrary, right? You're just buying a fraction of the company. In 2022, it doesn't have to be one full share, right? And so let me just say, there's a big secret out there. It's cloud computing. The three biggest players are Amazon, Microsoft, and Google in that order, right? In that order. Don't let this opportunity pass you by. Don't get conned out of investing in these companies, which of course have a lot else going on, right? By pundits on, we'll call it legacy finance media, who want to convince you that because a company has written down billions of dollars on its Rivian investment and has a quarter that doesn't live up to general expectations, that there's no reason at all to invest in that company, even when that company has a vibrant, growing division that is up more than 36% year over year. Right? We need to start we need to start considering Amazon to be a web services company that happens to do retail, more so than considering Amazon to be an online retailer. That's how I see it. Let me hear from you. I encourage everyone here to click the link below and to actually read Amazon's first quarter results for themselves. Right? I look forward to your comments. I hope you leave them in the comments section of this YouTube video. Thanks for stopping by.